Have Wall Street set the trap for us as investors and traders? 2 days of gap up and downs for the Nasdaq, 4 for the SP500, and some unusual options flows and dark pool activity just before big earnings kick off for the tech stocks. What's going on? In today's video, we take a look at the data moving forward, along with what we've been following for a little while now. The flows into Bitcoin, a huge breakout, an excellent day trade, and possibly the movement that could shape the next 2 months. Yes, that and more coming up in today's show, guys, as we talk about the good, the bad, and the ugly when it comes to markets. And boy, oh boy, did oil crash. Let's get into it right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll be taking a look at everything to do with the markets right now, including the latest macro lead indicators, and of course, the hottest charts and why you need to be watching some of these key levels. Let's begin though with the storyline of the day, which is of course, crypto asset flows. And as we posted over on our X account, links in the description down below, we found that digital asset inflows just hit $901 million last week, and that's driven the year-to-date inflows to a staggering $27 billion. That's almost 3 times the amount of 2021, and we can see it's all in Bitcoin as flows have really shown up here, and of course not in some of the altcoins such as Ethereum at this stage. Is this a good start? Absolutely, and we would expect this to only be going up now that we've seen a huge technical breakout over the last 24 hours, which we've been on top of as a community. Let's go back, though, to the stock market for a moment because breadth is starting to decline a little bit into this US election and the end of the year. As we can see here from Grant Hawkridge's chart, there's a lot of reds, and that shows that many sectors in the market are not actually above their 10-day overall stock average. And this means that we need to be paying attention. Of course, we've already brought a lot of attention to real estate, which is one of the worst sectors at the moment, thanks to the dark pool activity. And of course, we've also seen it in utilities. But what might surprise you is oil or energy stocks, even with the sell-off of the last 24 hours, are still holding pretty well. That's due to their internal strength, and also communication services have been doing very well into this earnings season. 2 sectors to certainly watch, along with another one that we haven't looked at in a while that just broke up over the last 48 hours. Let's talk, though, about the great run we've been on. September was strong, backing seasonal trends, so was October, and so far it's been 6 consecutive up weeks for the S&P 500. Well, if you don't know your stats, then you may not be aware that the following weeks can be a little bit tumultuous, and overall we may be able to see a small decline in markets, with markets only being up 31.8% of the time in quite a lot of reads since the 1950s, and of course an average loss of around 2.5 from this point. Now, does that make sense? Well, we've talked a lot about 5,700 being a possibility of a pullback here, and if we do get to that or a 5650 style market, then of course that would fall in line with many of the stats that we've brought up. But of course, everything is about putting it in perspective. If we look at the next 6 months, are we bullish? Well, the answer is, of course, yes. The next 2 months, the next 6 months, the next 3 months, all of these periods are looking very good from the data. And if you know anything about markets, November to April is the best run of the year in terms of pure percentages since the 1950s. This result from Carson Group shows us that the average return is 7.1% when you buy in November into April, and we on average 77% of the time higher. Not a bad stat, better than probably some people's trading systems out there. And that's just one to keep in mind when you're looking at the S&P 500, Nasdaq, or anything else. When it comes to first 10 days of any particular month of the year, you'll notice some are good, some are bad. November can be very bad to start with and then very good by the first 10 days. And you'll notice here that we on average have a 62.5% percentage upturn over the first 10 days. So if we do see a sell here, is it going to be short-lived? Well, of course, that is most likely. And it comes back to this seasonal trend that's different to most election years. An all-time high being reached in September is pretty rare. Whenever we've had this in the past, we've ended up into the end of the year positive. We also have had usually a pullback that's around 4%. So will we get that again? Well, that would push us into that 56 kind of 50, 56 kind of 80 zone, and we'll show with the options later it is possible. US stock market average returns from 1928 to 2021, just an interesting chart here if you ever want to take a snapshot. falling inflation is the best. And of course, that's what we've been in for the last 2 years at this point. Let's take a look now at the sentiment survey results. As we mentioned in our weekend video, it was strange. There was no doubt there is something weird going on here. From the AAII Bull Sentiment Survey, we're seeing a neutrality, a balanced market coming through. But when you take a look at other sentiment survey results, such as Grant Hawkridge has done here, you'll notice there is a huge discrepancy. And I think this means that we have to neutralize these particular sentiment reports coming into the US election. We've done some studies. We've found that 60% of respondents were actually changing their investment style into the US election. Bad idea, by the way. Statistically, not a good thing to do. Generally, you should be bullish into the election and bullish after the election, regardless of which party wins. That's statistics anyway. But we do know that, of course, it is taking its toll on the sentiment reports. And for now, we have to therefore ignore them until things get back into some uniformity there. Now, there are reasons to short this market. Overbought indicators, of course, in general, there was a sentiment problem. We're getting that seasonality potentially. We've got the late October into early November can be a little bit weak for a few days there. And of course, we've got that implied vol within the markets. But as we know, really, it comes back to what is the instrument selection? Should we get a pullback, which we already have seen a little bit of in the Russell 2000, 4% from the breakout the previous week. And we know, based on Jason Gopfert's data here, that when we have a fairly decent pullback, but at the same time still hold well above the 200-day moving average, the next 6 months and year look very, very good. Maximal drawdowns, not as bad as sometimes on the Russell, and the max gain actually looking at around 18%, not bad. But then we couple it with this. Did you know that the S&P 500 is being valued at one of the largest gaps that we've ever seen to the 500 to 600 stocks? So that is the stocks that are already quality that could be going into the S&P 500 in the future. We are now trading in the 96th percentile. And as we mentioned over on X, we've got this huge discrepancy between the S&P 600 small cap forward PEs and the 500 forward PEs. And this is something that just hasn't happened in the pre-COVID environment anywhere as much as it has in the post-COVID environment. Could we be going back to some form of normality here in terms of market actions and valuations? It's likely that if we are in that mid to late cycle of this current bull market, which we kind of feel like we are, then this could be a huge story of the back end of 2024 into 2025. A lot of people have been looking for it for a while, but as we know, statistically, it tends to rise up usually in that November to December period. So the Russell 2K, the smaller caps, the mid caps, these are markets that, of course, will be looked at. And I think they're, in terms of value, much better than you would have to say the Nasdaq and S&P at this stage. Now, why could we say that maybe we're only a little bit way through this market? Well, of course, when we overlay 2022's market with the 1960s, one of the best overlays at the moment, we're finding that we could still have a little bit more to run. We also see that the 1990s, that is a market that was pretty much a ballistic market thanks to the dot-com boom, also has some similarities with what the Federal Reserve has done in terms of central banks actually cutting rates, et cetera, et cetera, et cetera. So all of these things kind of make us think that we're about 2/3 of the way through this bull market cycle. That means that, yes, the easiest money has been made, but that doesn't mean that there is an opportunity on the horizon. This week is 28% of overall earnings. That means that it's pretty much the last of the big earnings weeks, and really it's going to come down to a few stocks. In less than 24 hours, we'll know about what Google's doing, what PayPal's doing, and what AMD are doing. These are the expected options moves, and remember, this sets the tone for the next couple of days. And as you'll find out in a few moments, the options market is also setting that same tone, guys. And basically, this is exactly what we're getting to. The options market is trapped within two prices, and if those prices are broken, we could get a big move. Let's have a look at dark pool. We know this one, the SPY dark pool, leading to chop in the markets. We've got the Tesla one. We've come back to this level now after going a little bit higher. Probably someone took some profit after that epic run after Tesla's earnings. And of course, we've now seen a larger dark pool transaction coming into the Chinese market, particularly one of the biggest stocks, Baba. Is this important? Yes, of course. We are paying a lot of attention to the Chinese market. Now it's pulled back due to the fact that we believe an accumulator, someone that's investing, is starting to see value in it again. Remember, China's market is a cat and mouse game between the Chinese stimulus and the market's expectations. And after the US election, we're going to have to expect further stimulus from the PBOC. Let's now take a look at Bitcoin. Well, this was a case of probably accumulation at this point. IBIT, one of the big Bitcoin trusts, getting another very hurried dark pool transaction right into the close. Big units, someone went ballistic, and they're going to be happy with tomorrow's action because, of course, Bitcoin is breaking out big time, and it's what we've suspected on the channel for a while here. We've been talking about this for about a month and a half, and guess what? Bitcoin's gone from strength to strength to strength. Remember, channels are all about flow. We need to see flow through different markets. Sometimes it's good to be in crypto. Sometimes it's good to be in metal. Sometimes it's good to be in stocks or bonds. At the moment, crypto is looking pretty strong. Let's move over to solar. Very good last 2 days. We showed this in our Monday overall stream, and really the market is doing exactly what you would expect, which is we're getting this uptick in a market that's been hated recently, which is solar after getting brutally sold off. Clean energy was the best sector of the day. Regional banks did well, which is of course good for the Russell 2000 trade. And we also saw biotechs coming through, which is another sector that will be doing a drive in on making sure we pay attention to that, because this is going to be a sector we want to watch should the smaller caps and mid caps start to actually make up some ground. Let's take a look at the S&P 500. As we mentioned in our live stream, really what's happening here is 5850 is the key level, and it's really struggling past that point. We mentioned we were in resistance leading into yesterday's open, and now we have a gap that we need to probably fill onto the downside. Does this make sense to what we're seeing on market action? Absolutely. 5807 is the gap. Most traded zones around 5850, no coincidences. And we're currently stuck in a trapped or sideways market. Now, if you have a look here, what is going to be important is really the earnings. If Google and the others live up to expectations and everyone's loving them, then we're going to snap a new high. And this may be the pullback for now. Maybe we run into the end of the year with minimal pullbacks the whole way. If we're going to get a bigger one though, we're going to break underneath about 5780-ish. You'll see that's important on the options in a moment. And then we will probably go down to around 5700 or 5650. These particular zones make sense to the statistics as well. Remember, we mentioned the idea of a 4% pullback. If we're going to get 4%, that would be sitting around that 5628, 5650. So very important areas coming up should the market get a pullback. If you're a swing trader, if you're someone holding for the longer term though, I wouldn't be too concerned. We're not really seeing the signs of extreme fear, extreme problems in the market just yet. Let's move over to the S&P 500, the all-important options flow, and you'll notice a very clear level, 58.25, 58.50. The market's trapped between a put wall and a call wall, guys. And we always know this is how it works. The next day, 5800 and 58.50 again. So the market's trapped within these two zones. Basically, we are looking for the earnings announcement to make the big decision, and then we'll go from there. Either way, we could be moving to a very easy equilibrium fairly quickly, and of course, we'll update you when we see that breakout happening. Let's move over to NVIDIA, still in positive gamma, still technically moving towards 150. However, the options, or more importantly, the earnings will have their way with that particular trade, depending on what's going on. I think the general base for NVIDIA low looks pretty good. 262.50, back to the most struck call wall here for Tesla, so back down. Some people are taking profit. Obviously, it wasn't gamma squeezing as much as you would probably expect. And Google, just before the announcement, I thought I'd kind of update you here. On the top end, if we do manage to get through 170-ish, of course, that will bring in that inverse head and shoulders trade, which you can see on the chart. So I encourage you to go have a look at that, and it could easily move towards the next gap. On the down end, you'll notice that we've got a lot of 150s and one kind of 45s in terms of put walls there. Just before we jump into the charts and we take a look at all of the key levels that we want to be watching right now, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, obviously, Tiger Brokers do have a couple of little extras for our Australian viewers and other viewers around the world, so check them out in the links in the description. But I want to talk about one of the reasons that we really like Tiger Brokers here on the channel. And of course, it's taking on feedback. It's having a HIN here in Australia. It's having competitive pricing with really cheap stock trading ability. But I think it's the 24/5 that makes the biggest difference. Think about it. We're in earnings season. A big earnings comes out, such as Tesla the other day, and the stock goes to a replicable pattern as it breaks to a new high. You might want to trade, but with some brokers, you won't be able to. Well, with Tiger Brokers, 24/5 allows you to be able to do that. And of course, you can access 9,500 plus stocks. This seems to keep going up every single time I look at it, and it's a beautiful thing to see. So if you're interested in Tiger Brokers, check them out. Links in the description down below. And remember, they're also increasing their overall fundamental data as well based on some of my feedback. They're bringing in AI investing companions that reads articles for you like this, which is awesome, and then summarizes them for you. It's all about saving time in this busy world. Check them out in the links in the description down below. So let's now jump into the early indicators. Are we seeing really big signs of weakness in the market? Well, firstly, guys, not really. Home builders, it's weak, sure, but we kind of expected it to be weak, and it's still making a series of higher highs and higher lows on the higher timeframes. So whatever this is at the moment looks to be light weakness, looks to be basically like a little bit of selling here going through. A lot of people are bringing up US 10-year. All the yields are going up. Everything's going to explode. I think this is just more getting in line. Remember, the Federal Reserve is claiming this is their dot plot. The market was like this. You're going to get a lot of cuts. It's come back more into harmony. That's good. It's a good sign. It's exactly what you would expect. And again, it's being priced into the market at this point. Now, if we actually look at Treasuries, which we'll do now together, we won't look at crypto just yet, you'll notice here in Treasuries that the market has moved down into the 91s, 92s. Now, if the 10-year is going to hold at around those levels, then this, of course, would be where you'd expect it to find those little bounces. So an interesting level. Druckenmiller and others are trying to say they're claiming to short Treasuries, but they were probably doing it up here. This is a very keen level, and of course, we'll be watching for price action here. But for someone that's looking for the longer term, maybe Treasuries is looking interesting. I personally am looking for dark pool transactions. I want to see some big players come back in and start purchasing Treasuries, or it looks like purchasing in a big way there. So let's now take a look at the US dollar. It's more of what you would expect. Basically, the dollar has come back to our next resistance zone. It's finding a little bit of trouble, but it hasn't turned towards the downside yet. So just remember, for now, the dollar is still in strength. It's at a key resistance, but we will be looking for an update over the next 24 to 48 hours, and there may be a large move coming in the dollar. Gold, well, it's gone from strength to strength to strength. I would have thought it on the small timeframes may have had some weakness in it, but as I've mentioned, I'm not shorting gold this year, too bullish on it. We're going towards 3K, and we're loving what we're seeing on the higher timeframes. Gold at this stage looking like it may even want to break to the upside, and in our next video, we will share the inflows, which have just hit a record almost in terms of the amount of people trying to buy into that market. What about silver? Well, it's remained in a long leg doji, long leg doji, long leg doji market. 3 long legs, and we know that when we go into the smaller timeframes, things have actually improved over the last 24 hours. Could this be the turn up for silver, and therefore it breaks to a new high here and maybe goes on to those levels where it should eventually be, which is $45 to $49 an ounce? Well, this is a good potential day trade here. We've seen some strength. A lot of people would be in those kind of levels around 33.50 to 33.40. And at this point, we're looking for, of course, it to break 34.30. If it does that, then it's probably going to a new high at this point with everything that's going on. What isn't going to a new high, though, now has to be oil. Absolute destruction on oil. All the way down here into the 68.50s. This market is one that probably caught me a little bit off guard. We saw CTAs obviously improving. We saw decent price action, although it was early days here off the downward trend line. Obviously, it's still technically on the downward trend line. And it broke to the low. That's trading. Sometimes you're going to win, sometimes you're going to lose. I was mentioning actually to our private community that things have been going a little bit too good recently in terms of the moves. They were just way too good. And where you might win big time on Bitcoin, hey, you might lose a 1-to-1 over here on oil. So oil has dropped. I'm not looking for anything on oil yet until we see a bid. Now, do I like it at this price? Not really, because of course it's pressuring this huge support, and you've got to ask yourself the question, why is it back down here again? What happened? What's going on? Let's let the price action play that one out, and we'll update when it does occur. Tesla pulling back to 262.50, which is the call wall. Obviously, it's in a run at the moment. Are we going to go to 303? That really depends on probably earnings season this year, and whether the rest of the big tech stocks can bring it along with it. It is in positive gamma for now. And Nvidia is also positive gamma, but will be affected by earnings. So not much to update there. MSTR, just off the last dark pools that we got back in early October. Take a look how beautiful this run has been. Congratulations to people that have been in this. I've seen a few people saying, I'm loving the MSTR. Well done to you. Not my vehicle of choice. Of course, I like Bitcoin, but it's obviously done some improvement there. When we move over to solar, you'll notice here we've got an island reversal, a potential Wyckoff base, and some big moves. Now, this was brought up in our live stream, which we do every Monday for the public, and obviously every day if you want to join our private, links in the description down below. And this thing has been running. This looks like it could be a turning point here for solar. And we've had this a few times in 2024, and they've gone ballistic for a few sessions and then pulled back. So it may be short-lived. For now, you'd be looking into the 42 to 43 style range if it is to keep going on the upside. But it is a bit of a tick up in what looks to be a rotation, as we mentioned, into those 500, 600 and smaller cap stocks. US 30 still looks pretty weak. Obviously, nothing good coming out of the Dow at this stage. And the US 2K had one of the better 24 hours, actually bucking the trend here with the two rejections and finding strength. It may still sell off, as we've talked about, underneath this low and even go as low as 2074. But in general, I think that the next couple of months are looking much better for this particular market. Things are starting to flow in the good way when it comes to the US 2K. US 100, up, down, all around. Again, couple of sells here. Still a pullback in time. No real definitive break. It's going to come down to earnings, and we'll update after we see those Google earnings. But where big breakouts are occurring is Bitcoin and crypto. Look at Solana go up at 182. Probably going to snap a new high in the future. This is a beautiful thing. Absolute trading perfection. Beautiful price action. If you guys messaged me on this one, I totally agreed with them. Great stuff on Solana. Ethereum is actually activated along as well inside of its triangle. Good stuff there from Ethereum. Finally getting a little bit of a bid, but Bitcoin is the master. Take a look at this. This one was absolutely out of our day trading masterclass. Replication central inside of the direction of trend. I mean, it just doesn't get any better than this type of trade, guys. And this is a trade with, of course, also the data backing it. What happens if now it continues to ride? Will this go to an all-time high? I want you to put in the comments down below. Is Bitcoin going to an all-time high? Give me your prediction by the end of the year. Is it going to 90? Is it going to 80? Is it going to 72 and then going to explode? Let me know in the comments. But yeah, very nice trading here. And obviously it stuck the daily, which is important. Now we'll check the weekly. But all things are kind of pointing towards an all-time high coming. In terms of the week ahead, it really comes back down to just knowing that non-farm payrolls is this Friday. Remember, it's 1 hour before the market opens. Sometimes it can go one way and then go the opposite way, so just pay attention to that. And as always, if you want to follow us on more of the socials, do so in the links in the description down below and check out some of our stuff. It'll be great to also see quite a few of you from New South Wales, Sydney, just tomorrow, as we've got one of our trading events going off there, which is going to be fantastic. So just before we wrap up today's show, big thank you to Tiger Brokers. Obviously, check them out in the links description down below. And remember, there are extra special deals for FX Evolution community members. Whether you're from Australia or somewhere else, check them out. They've been around for over 10 years. And of course, they win awards all the time, with their latest award coming from Finder, which is a big thing here in Australia. And they're doing really well. Thanks so much for watching, everybody. We'll see you in the next video. Bye for now.